I experienced to buy a token once before and the next day, it crashes like it heard that I bought it. Yeah, I mean, that's every beginner's villain origin story, right? I get excited that time, I hit buy and boom, market drops just to humble me personally. So in that case, today we're talking about how to stop getting played by market timing through a calm, consistent move that we call dollar cost averaging or DCA. Have you heard that before? It's basically the peaceful investor strategy, guys. No hype, no panic, no sleepless night staring at charts. Just quiet, steady progress week after week. And before you zone out, yes, this works even in 2025's roller coaster market. When Bitcoin can drop 10K overnight and somehow everyone still tweets by the dip, let's actually make that dip make sense. Dollar cost averaging or DCA simply means buying a small fixed amount of an investment on a regular schedule, okay? I mean, no matter what the price is that day, it's like building a habit instead of taking a gamble. Whether the market's up, market is down, or on its sideways, you stick to your amount and your date. So think of it this way, guys. You don't skip groceries because fruit prices went up, right? You still buy what you need every week. Sometimes mangoes are cheaper, sometimes it's more expensive, but by the end of the season, the cost averages out. So same principle with DCA in crypto, guys. You're removing emotions from the equations. And here's the beauty about this, guys. This approach works well, especially in unpredictable markets. Just look at how Bitcoin recovered after dipping in February 2025, only to rally back above by May. So those who kept DCAing didn't panic that time. They actually bought more during the dip. So if you're just starting out, DCA is your best friend because it kills two dangerous habits, guys. FOMO and panic selling, which is all we've encountered when we were starting, right? So when the price pumps, you won't feel pressure to chase because your next buy is already scheduled. You know what I mean? When it drops, you don't freak out because that's literally part of the plan. It keeps you calm in a market built in chaos. In 2025, guys, retail traders who use DCA reported less emotional stress compared to those trying to time trades, okay? CoinGecko's latest behavior report found that over 60% of small investors that using DCA said they felt more confident and less reactive to dips. That's not just better results, that's better peace of mind. We all need that peace of mind, right? So that mindset shift is what matters, especially to me. So instead of asking, is now a good time to buy, you start saying, it's Friday, time to my usual buy. That's the level-headed habit that builds wealth long-term for sure. So let's make it real. Say you decide to invest $20 every Friday for 12 weeks. That's $240 in total, right? So some weeks you're gonna buy high, some weeks low. But at the end of those 12 weeks, you'll have an average entry price that often better than if you try to pick one perfect day to buy. And the more important, you build consistency muscle. And according to a 2025 Bitwise analysis, guys, Bitcoin investors who DCA'd weekly since 2022, I mean even through crashes, guys, still outperform those who only bought during dips. So timing the market gave worse long-term results than just showing up every week. Now, DCA isn't magic. It won't turn bad projects into good ones, okay? It works best for long-term assets you believe in. I mean, things with solid fundamentals and staying power that could, let's say, Bitcoin, Ethereum, Solana, etc. or even broad stock index funds, guys. If you're trying to DCA into meme coins hopping for moonshot, that's not investing, guys. That's just dollar cost gambling. You stick with your asset you actually think will still exist 5 or 10 years from now. So that's what long-term holders did in 2024 and 25 when crypto went sideways. They ignored the noise, stuck to their schedule, and came out ahead once the recovery hit. So data backs it up. Even Vanguard's 2025 DCA study shows that consistent monthly investing in stable assets beat lump sum timers 70% of the time across all market cycles. Did you see that coming? So yeah, it's not about luck, it's about playing the long game, okay? Let's talk setup. Okay, step 1, pick your amount. Doesn't have to be big, guys. Start with something you won't stress over, even $5 actually. Or how much is $5 in my country? 250 pesos because I'm here in the Philippines. Okay, step 2, pick your day. I mean Friday or every payday, whatever sticks to you, guys. Okay, step 3, automate it if possible. Apps like coins.ph or PDAX let you set recurring buys now. If not, use your calendar. You want this to be muscle memory, okay? Step 4, track it for 12 weeks. Write down what you bought, what the price, and how you felt. You'll see yourself getting calmer over time for sure. Okay, so that's it, guys. No chart, no timing, no panic, just the habit of showing up. So here's the takeaway, guys. DCA isn't about predicting the market, right? It's about removing the need of. It's your calm, mechanical system that keeps you investing even when everyone else is losing their minds. You don't need to wait for the perfect time, guys. You just need a plan you can actually stick to. So pick your amount, pick your day, and start today, guys. Not when prices are perfect, but when your discipline is ready, okay? This is Simply Crypto. Once again, remind you, investing doesn't have to be stressful. Build the habit, not the headache, okay? And if this video helped, hit like, subscribe, and share it with one friend who still says, I will gonna buy when it dips. Because when DCA, every day is the right day to start. See you in the next one. Bye!